Friday. Can you dig it? I'm Brad, your host of the No Bull Precious Metals Report, and today is June 25th, 2021. And before we recap the week, if you enjoy this report and the content being brought to you, please like this video, share it like a blunt at Burning Man, and subscribe for updates. It all goes to feed the algorithm. So everyone buckle up and let's see where the roller coaster is taking us today. First up is on the board, we can see it oozes with optimism. There aren't too many extremes. There's a few that have kind of turned. We've got gas, heating oil, lumber, and a bunch of the grains have kind of turned into more of that lighter red. However, we're seeing a lot more of the green and the blacks that are there. So it actually isn't too bad. I like to call this a Matrix Day. If you haven't seen it, go watch the movie and you'll get the illusion to that one. So anyway, the equities are somewhat mixed. We see the Dow Jones is up pretty good. The S&P is there. The NASDAQ is barely positive by 0.03%, and the Russell is up by almost 0.5%. So generally that's not too bad. Metals, they're always kind of a mixed bag. We've got gold and silver, they're doing okay, which I'll get to later. Platinum, which is up 0.9%. Copper has stumbled. Copper is down by 0.78% right now. And I might have some reasoning for that, which I'll get into in a second. And of course, palladium is, it's the precious metal that tries, and I really don't cover it too much just because of the volume aspects and where it falls. It's just not that important to me, which in some circles I'd get some hate mail on that one. But anyway, let's jump into the reports and see where we're at. Oh my, what is this? Everything looks different. Yeah, so I've actually been working on a revised version of the dashboard for quite a while. I maintain several of them within the code base across various things because there are certain things I want to see at certain times, and certain dashboards have certain uses. So this one's actually been in development for a while. I was actually hoping to launch the channel with it, but I just didn't get it done in time. And so I finally had some free hours to brush up with things and went from there. So there it is. I'll see how it goes and tweak as things go along and make things a little bit easier and hopefully provide some better information and all that good jazz. But anyway, with the reports. So today's Friday. We had some interesting stuff that came up. We had three reports or three numbers that popped out of a pretty major report that came through, as well as a preliminary report. So let's look at those numbers. The first one is personal income. Personal income was down in the previous period, negative 13.1%. It's now at negative 2% with an estimate, which it actually beat estimates. So personal income is exactly what you would think it would be. It's a metric that's collected based off of the income that's coming into people. So wages, tips, all of those various sources they collect and then they basically do the metrics on. So this actually shows that income is going up. It's still 2% below the baseline, but it's not as bad as it used to be. That's kind of positive. However, when we look down, we have the next line, which is consumer spending. Consumer spending was at 0.9%. Analysts were predicting it at 0.4%, and the actual number is zero, nada, nothing. So there's nothing that's really there. It doesn't mean that there's no consumer spending. It just means there's no change in consumer spending. So So that's not necessarily a good thing. Consumers have to spend in order for the economy to grow, which also goes into the core PCE price index. And core PCE is pretty much, I mean, the inflationary gauge. It's the basket of goods. Um, so when we look at that, it's everything excluding food and fuel. Why they do that? I'm I, well, I know the answers to it. I don't necessarily agree with it, but that's just the way that they want to do that. Um, so this is everything that's showing everything else within the economic spending of consumers. So when we look at that, previous period was 0.7% on the increase. They were expecting a 0.6% on the increase, and the actual increase was 0.5%. So there was a decline in that. So overall, this big report, these three reports, actually aren't that bad from an analyst economic doom and gloom perspective. Um, they're not perfect. They're not good, what I would call it that way. But they're not as horrible as they possibly could have been. So that's part of the reason why the equities markets are the way that they are. There's some positive news that came out of that, as well as the fact that when Janet Yellen and Chairman Powell were up on the Hill this week, trying to spit that one out. When they were up on the Hill this week, they they got beat up pretty good, but I think that also at the same time they defended themselves pretty good. And there's a lot of economic sleight of hand that's going on, things of that nature. But I think the markets are reacting somewhat positively. Obviously, because they're still mucus green, they're not, they're not jumping for joy over any of this. But at the same time, they're not really like screaming at them or throwing a temper tantrum about it. So the other report that just came out at 10 a.m. this morning was the University of Michigan Consumer Sentiment Index, which is the preliminary report for June. And the previous period was an 86.4%, or 86.4. They were predicting an 86.5, and we actually got an 85.5. So that in itself is a leading indicator that, okay, that might go a long way towards explaining the consumer spending number of zero. So that's part of it. Now, when you take this in conjunction with a lot of the numbers from yesterday, especially the ones that weren't related to joblessness or anything like that, but we start talking about durable goods, we start talking about capital goods, and everything else that goes along with that, we can see that the industrial segment is also kind of, it's really hard to come up with adjectives that mean, they're middle of the road. They're just not really that great. So that's where we're seeing a lot of this mixed bag of metals, really. Silver's up, silver's down. That there's not a huge consumer market. There's not a huge industrial market at this point. The future's in doubt. All of these various questions that surround. So we're not seeing this huge excitement over futures contracts. And it's important to realize that a futures contract, when we start talking about that, it's a contract for the future. So, for example, currently July is a delivery month. So silver purchased right now is probably getting allocated in the bulk of it towards the July purchase period. The following period would be September, and then so on and so forth. So they have to look down the road as they place these orders and do the trades. And if there's just no excitement down the road, especially in the near term, you're not going to see significant near-term price adjustments. So for right now, July seems pretty flat. There isn't a lot of excitement surrounding July. So we'll have to wait and see as we start getting into July, what that's going to look like for September and beyond. But that kind of lays the land and the situation that we're dealing with right now. Coming up next week, we've got, not really that much. The big thing is on Wednesday we have the ADP employment report, and that's great. Pending home sales, Chicago PMI. We've got the manufacturing report, another manufacturing index, construction spending, and motor vehicle sales. Those are great. Those are awesome. We also have on Friday the non-farm payrolls, the unemployment rate, hourly earnings, trade deficit, and factory orders, and those are awesome. So there should be a lot that comes up next week, that's going to drive a lot of the industrial segment and the industrial component of some of these metals. So look for movements in silver and copper depending on what they have to say. So going to our 10-year Treasury rate, and wow, look at that. The graph is different. So what we saw was yesterday we were still riding pretty much the same. We had been at that 1.48. We finally hit that 1.49, so it adjusted by 1/100th of a percent, and now we're just riding flat again. And we'll have to see where that kind of falls as the day goes. But again, we're not seeing this type of radical movement like right here over 3 days. Back in May 10th, 11th, and 12th, it had shifted from 1.58 to 1.62 all the way up to 1.68. So it had adjusted a whole 1/10 of a percent over the course of that time. And now we're just kind of seeing a flat period over the few days. And even if you look at the chart, there aren't too many of those over the course of the 3-month survey that I've got. So this indicates some level of stability, at least on this segment of the market, which, going along with everything else, stability in this way, yeah, it's probably pretty good, but I don't really like seeing that. I hate when these types of indicators move sideways like this. If they're not going up, they should be going down. And if they're not going down, what's holding them there? Why is there support? Why is there some level of foundational activity that keeps them where they're at? So that's, it always makes me a little bit nervous, especially going into, an end of the month. But anyway, that is where it is. Going through, let's look at the markets and see what they have to say. So silver and gold, we have some similarities here, but as we go through, let me take a look at silver, and you can see that we've had some pretty radical jumps this week, all the way from this low point right over here of 25.61 all the way up to this high point of 26.31. That's pretty good. I mean, all things considered, the way the week has been. So right now, we'll take it from, we'll say, noon yesterday, and we'll just look at this. And one of the things that we can see is that we are still on this ascendant trajectory. Everything is still rising. As we had kind of left yesterday, we weren't really sure where things were going. And we did have this kind of consolidation that went through. And one of the things that you might notice right now is that the 5-day VWAP, the bands are very, very, very tight. You're not seeing this wide distribution that we had previously. And part of that goes into the equation that this isn't just price action, but it also has to do with volume. And the thing that I've been kind of preaching all week is that volume has been lackluster, to say the least. So this is really reflective of it. We've seen this tightening of the deviation bands. The movements have been, what they have been. But as we start moving forward, the price can go up, and these bands really aren't adjusting that far. So right now we're riding well above the +2 deviation band. We've got this close, 26.75. We have a 10-point spread between low and high, 26, 26.5, 26.75, I'm getting totally like tongue tied on this. 26.265, 26.275, and 26.285. So that's a 0.02% spread in the pricing between high and low. So there's some movement. It's not really significant. It's not like we're seeing like dollar swings or anything like that on movements. So I expect that this is probably going to continue for right now. There's nothing in the cards for me that shows anything that's going to force this down. There are no major announcements today that seem to be coming up. They're going to push this down. If it goes down, I expect to see it within the foreign markets over the weekend. Things like that. So watch out for that. But otherwise, I would hope to see some level of push upwards, just as we start reaching that final 30 days before delivery. And then gold. Gold is pretty much the same way, although gold, you'll notice, has much wider bands. We're doing considerably larger on these. But gold has moved a lot more, and there has been more volume behind these pushes at times. But even now, we can see that gold is still riding right at the deviation. It's above, but it's not crazy above. There we are. So that's from yesterday. Let's take a look at what the previous day was. And we can see it's still riding above that. And then the intraday, yeah, we zoomed off of that right there. So again, gold is, kind of lackluster. It's only at 1787. Again, I'd like to see it over 1800. But I think that it's slowly starting to creep up that way. It just doesn't seem to have quite the oomph that silver has right now. Not that silver is showing some major price increase or anything like that. Moving on to the 5-day performance, we can see that. We'll overlay with gold, and we can see, we still have that divergence here, but the consolidation, we have that similar consolidation that keeps on going through, and then there's just this opposition at different levels. So we are still in the positive, though. This is the baseline right down here where we're at. So looking at all of that, overall, it wasn't a bad week. Both of these have, it hasn't been significant, but we're still looking at, 1% gains. Well, right now, almost 1.5% gains. So not too bad. Copper, yeah. Copper just kind of, was riding pretty well, and then it just diverted all the way out. So that is with that. We have the gold silver ratio is at 68.05 market on market, and then retail to retail is 59.14. So not bad numbers, but it's just reflective of where things are. And this was interesting as I was kind of watching this yesterday. I'm doing some work and everything else, and I'm testing out my charts. Not really paying too much attention later in the day, and then all of a sudden I see, the big tower of power that's here. And I'm just going to remove gold and silver from this so that I can see what so right at 4 o'clock on yesterday, we had a copper transaction for 327,000 contracts. That's pretty significant. That's large. Everything else, not so much. And even when we pull this back and we remove that outlier from this, we can see that, you know, gold spiked at 35,000, silver spiked at 16,000. So nothing to write home about. But as we look at this, we can see that copper spike was right here, you know, and that was just, it was huge because it was a big spike in volume, and it moved the price, you know, by negative 0.09%. So not even a tenth of a percent. That's a battle. That says that there are two sides of that really want in. And as that volume starts spiking, there are people who are both buying and selling. And ultimately it was the sellers who won, but only by a slight margin. And that's what's interesting about the markets to me. That's why I watch the markets, is for things like that, because you do get to see the battles in the record. You know, we can look at something like this and think, okay, there were two trading desks or multiple traders or whatever contract holders that all of a sudden started seeing this movement instantaneously, and then, you know, that they sprung into action late in the day. So it just makes for very compelling storytelling, even if it is just in my head. So let's shift over to retail. Well, let's talk about that. So what we have, I just want to do this quick, so I'm having some style sheet issues. Anyway, so we can see, as we're finishing up the day or the week, that the benchmarks, you know, that they're still down. The Eagle, not down as far as where everything else was, but we do definitely see that steady decline that's gone all the way through. And it's really just kind of held the trend all week, which, you know, next week it'll adjust again, but it is what it is. When we look at the generic silver, we can see that the average price is 31.61. We can see the median price is slightly higher, 31.67. But we have a distribution between 30.86 and 32.25. So looking at that, you know, we're riding roughly in the center. Both average and median are converged. So it's a good distribution across it. We've seen a general upward kind of a trend. It was a little bit better probably a couple hours ago when everything was just a couple cents higher. But we can definitely see that as the price is adjusted, so has this. Still not a bad price. And again, with the way that the market's moving and the way that everything else is moving, it's probably not a horrible time to look around if you're going out this weekend and shopping. Looking at the Silver Eagles, there we are. So we have had some differentiation over the week, but mostly the prices remained pretty consistent. Right now it's at 42.01 on average, 43.28 at median. So the average price is below the median, which means that the low prices are dragging down the average price. So there are a few anomalies that really kind of draw that line lower than where the median is. So the median price is actually higher, which means that there's more linear numbers, or there's more volume of numbers at the higher end of the scale than there is outliers to it. And I know that made no sense whatsoever, but bear with me. It means that, you know, if you can find a price that's more towards that 36.75, good luck. Go for it. It's not the common one. You're going to find more prices that are closer to the median than closer to the average. So that's basically where that was going. Spot divergence really hasn't moved too much. We are going to take a look at the retail variance from spot, and we can see that, most of this has been a very tight grouping all the way through. The Silver Eagle dropped at what, 2100, 7 o'clock, or 9 o'clock last night, um, and kind of left the group per se, went out on its own. And then we had the same thing that happened at 12:30, but then by 1 o'clock they had changed again. So every once in a while, one of the things that this really proves is that if you look and if you're watching, the dealers do things in the middle of the night. So if you're watching, you normally have a slight window to find either it's a discount or, well, in this particular instance, get screwed. Where you can find the price is non-reflective of where spot is and where the markets are. So something to keep in mind as you go through, whether that informs your buying period or your decision making or anything like that. It is what it is. So turning over to gold, and we'll wrap this up, is again watching that American Gold Eagle, the 10th ounce. We can see that the price is still kind of climbing up. It's even higher than it was 2 weeks ago. So 2 weeks ago, the 10th ounce average was 25.4760 per ounce, and now it is 25.8560 per ounce. So the price has definitely gone up on it. Is it justified? No. And that kind of goes back to my rant yesterday of why fractional gold is, it has its purpose, but tends to not be the wisest buying decision. Especially when you start looking at like 1 ounce generics. You can see that it's decreased over the last 2 weeks. The Kangaroo has decreased over the last 2 weeks. The Philharmonic, Cougarand, the Maple Leaf, the Gold Eagle, the Buffalo, even the 10 ounce bar has all decreased over the last 2 weeks. So the 10th ounce Eagle, that's gone up. Go figure. So anyway, moving through onto the gold item, we could see that kind of the same thing as the silver generics. However, we've had a much better range of kind of this upward trend. We had kind of this low point that was on the 24th yesterday. That wasn't too bad, but now we've had this kind of ascendancy that's gone up, and it's done pretty well. And again, we're right there with there's a dollar difference between, actually less than a dollar difference between the median and the average. So there's a good distribution between high and low. Generic gold just has always impressed me for consistency. So just something to keep in mind as you start looking for it. And it does have a decent premium. Current spot 1784.10 as I glance over. And this is 1869. So, you're still dealing with a decent premium on things. And as price moves up, you can expect to get that back. So just things to think about. The market to retail, this kind of has an interesting pattern to it. We can see this, we start out good, we move along, in tandem. We're at, where we're at, we go all the way through. Yesterday at 12:30, again, all of that changed. We can see where the prices diverged, but yet, man, the Buffalo does its own thing. And every day I look at these charts and just say to myself, wow, these things are just continuously doing the same thing. And the gold Buffalo has not kept up with the price changes of spot. So it's one of those things that, I might have to revisit those. I've never been a fan of the design, anything else, but gold is gold. But it's just an interesting price distribution. So that is going to do it for today's report. Sadly, I don't expect to have the daily report for you until after the July 4th holiday. I'm going to be out of town and not taking my financial laboratory with me to do my usual activities. I will return though, so you can count on that, and wistfully count the days until you can hear the soft melodious tones of my voice inundating you with data about charts and talking poetically about the movements of spot and retail. But anyway, so until next time, happy stacking.